America's middle class is spending like the economy is booming, but Bank of America's CEO is quietly warning about a K-shaped future almost nobody's pricing in. Stick around, because later in the interview he reveals the new normal rate structure his team is betting on, and what it means for growth, IPOs, and M&A.
To 4.5%. And so it was good, and around the Black Friday in the U.S. and the Cyber Monday and all the things they talk about, the spending was solid and good, and it's consistent with a growing economy. Our team has economy growing next year at 2.4%. So Candace and her team, who are the best in the business, that's their thing. But everything we see in the consumer side sets that up.
Is there a worry about affordability? So we hear it from certain pockets of consumers.
Yeah, and there is. And so this is why you have to sort of sort the aggregate economic impact of the consumer, our 70 million consumer spending, versus the different deciles of income and things like that. But if you sort it into thirds, and our institute that writes on this, the bottom third is growing. It's just growing at a slower rate than the middle third or the top third. And so that's what you hear about the K economy and things like that. The good news is, with the unemployment rate at 4.4% or so, the new claims for unemployment is still at a very low rate nominally compared to where they compare it to 19, but the actual labor force is bigger. Those are all good things. So the people are working, they're getting paid, et cetera, but they are worried about prices and affordability, and I think that will dominate the conversation until it settles in.
Would a Fed cut help?
A Fed cut helps, and our team believes the Fed will cut next week. They came to it slowly because the inflation is still higher than the target rates that the Fed would have.
And sticky.
It's sticky, although right when they started raising rates, people told me it takes 5 years to actually squeeze out inflation, and people just aren't patient, and so it takes a while. So it's been coming down, and it's it's sticky. Is that it's not making the incremental progress a little different? But I think the belief is because the labor market's softer, they'll lower rates. That's how our team got there. But we get into the hand-to-hand combat of next month and next week, and the question really is longer term. Our team thinks the Fed gets down to about a 3% Fed funds rate. The 10-year rate sits in 4.25%, 4.5%, and that's a more normal rate structure for the United States. And I think that's not a bad thing. If you have a little higher inflation, a little faster growth, and a normal rate structure, then I think the incentives created by very low rates and stuff are out of the system, and I think people can then act on economic incentives.
And so what does that mean? That animal spirits are back in terms of also, IPOs and M&A, or does it take a while to settle? The market was also a little bit of a tissel because of the possible new Fed chair being Kevin Hassett.
Yeah, I think you've got to, I walked the trading floor this morning, you've got to sort out people who worry about 5 basis points on the 10-year versus people who worry about the next 50 years of the United States and a strategic view of the world. But if you look at companies, the activity kicked up after the new administration came in because there are a couple things. One was that you could get deals through the system, get them done, especially in the United States, on it, and that's important. So in our industry, which we are not allowed to make any acquisitions deposits by the law, it's been on books for 30 years. But in our industry, as an investment banking firm, our advice is you can get deals done, and you're seeing the time frame to approve a deal drop by half, and that's important because the idea of a deal being open for a year and a half, that's tough on the companies, and so that's good news. Then the second thing is settling out the major policies that you guys talk about every day on trade and immigration and tax. Those are settling in so people can see that. There's still work to do, but I think that means that companies can look and discount cash flows and make decisions, and then even a rate structure that's higher, as long as it's consistent, they can plan into it.
Brian, you know Kevin Hassett, and you've known him for quite some time. Yeah. What kind of chair do you think he'll be? Will he bow to the president's will?
Well, he's got to be nominated first, so let's let the president do his work and make his decision. But look, I think all the candidates are highly qualified. Our job is to work with them. I think the Fed, as an institution, has to be independent. There's no question that. I think the U.S. Fed is the example for the world of how to run a centralized Federal Reserve with independence. There are parts of it that there's a lot of commentary about the supervisory side and the reach and the activities. That's a separate question. But the Fed independence on monetary policy is key. I think Kevin and all his colleagues that are talked about would all believe that and understand that and drive that.
Brian, there's a lot of geopolitics today. Macron's in China. We have Vladimir Putin over with Prime Minister Modi in India. There's a lot going on with Ukraine. How do your clients work around this internationally? So you say some of the tariffs have settled. Yeah. Do they worry about anything more for 2026, or do you think again they're ready to do deals?
Well, generally there's things that you look at. You say I can have an impact on this or control it, or I can make a decision on it, and other ones you can't.